Welcome to the deep dive. Today we're cracking open the really fascinating world of forensic accounting.
Yeah, it is.
Think high-stakes detective work, maybe, but with numbers as your main clues. The name itself, forensic, tells you it's serious stuff, suitable for court.
Exactly. So if you've ever wondered how, financial foul play gets uncovered, this is kind of your inside look.
Hmm.
We've got a great set of sources for you today, The Learner. We're pulling insights from the ACFE on the profession, an article from CTAC's Audit and Advisory on Ethics, which is key,
Right.
a comparison with auditing from Stevenson University, that's super helpful. Then there's Wikipedia for the basics, an IJCRT article on techniques, some really gripping case studies from Culpeper CPA, and a look at regulatory compliance from Teichner Accounting, Forensics, and Valuations.
Okay, quite a spread. Our mission then is to pull out the most important bits from all of that. By the end, you should really get what forensic accountants do, the skills and ethics involved, how they're different from auditors, the techniques they use, and some real examples of their impact.
Let's dive in.
Okay, so let's start right there. What's the core function? What does a forensic accountant's job actually look like day to day?
So at its heart, it's really about blending accounting knowledge with sharp investigative skills. That's
Yeah.
the fundamental thing.
Okay.
What's interesting, though, is where they work. It's not just like the big accounting firms. You find them in consulting, law firms, obviously vital there, law enforcement, insurance companies, government agencies, financial institutions, pretty much anywhere money moves.
It really sounds like a field where the demand is, well, booming. The ACFP suggests it's growing fast. Why do you think that is?
Well, I think it's mostly because people are just much more aware of fraud now, and there's less tolerance for it.
Makes sense.
As for what they do, it's quite varied. They do forensic research, basically tracing funds, finding assets. Then there's deep forensic analysis of the financial data itself. And a huge part is preparing forensic accounting reports. These have to be rock solid for court. Often that means getting analytical data ready for litigation. And sometimes, testifying as an expert witness.
Testifying. Wow, that adds a whole different pressure, doesn't it? So they're not just stuck behind a desk crunching numbers.
Not at all.
Yeah.
They're often right in the middle of legal fights over complex financial stuff. Beyond that, they're key in recovering proceeds from serious crime, providing the evidence needed to, confiscate assets. You also see them in professional negligence cases.
Right.
And maybe less, obviously, in things like family law, analyzing lifestyles for spousal support, figuring out income for child support, dividing assets fairly in a divorce.
Forensic accounting and divorce settlements. That's a connection I wouldn't have immediately made. Interesting.
Well, yeah, it's a big area and growing. And, increasingly, they're also playing more proactive roles inside companies,
Proactive. How so?
like doing extended audit procedures that go beyond the standard checks, advising audit committees on risks, helping set up fraud deterrence programs, even helping investment analysts dig deeper into financials. It's becoming as much about prevention as investigation.
Okay, that paints a much broader picture. Now, you mentioned the comparison with auditing from Stevenson University. That feels like a really key distinction. How are forensic accountants fundamentally different from traditional auditors?
Yeah, this is crucial. They both deal with financial info, obviously, but their approaches and goals are pretty different.
How so?
Auditors generally follow a more, let's say, standardized path, consistent procedures, established protocols. Forensic accountants, though, they have to think more like detectives
Right.
because fraud is usually hidden on purpose, right?
Okay.
So they have to figure out where to look, which people, which areas, which functions need that focused attention to find the red flags.
So, if I'm hearing you right, auditors are mainly checking for overall accuracy, making sure things follow the rules, while forensic accountants are on a specific hunt for potential wrongdoing.
That's a good way to put it. Auditors want to find material misstatements, problems that need fixing, and give an opinion on whether the financial statements are reliable overall.
Okay.
Forensic accountants, they're digging into evidence of potential crimes. And often, their goal goes beyond just finding it to understanding how it happened and suggesting ways to stop it from happening again.
But they must share some core skills, surely. Both are deep in the financial data.
Oh, absolutely.
Yeah.
It's a solid grasp of business, accounting principles that's table stakes for both. They both need to be great at reading complex financial documents. And, critically, both need to be objective. You can't audit or investigate properly if you're biased.
Yeah, objectivity seems paramount.
For sure. And it's worth mentioning forensic auditing specifically. Stevenson University points this out. It's like a specialized type of audit, really focused on investigating potential fraud, often kicked off by specific suspicions or allegations.
Got it. A sort of investigative overlay on the audit function. Okay, let's switch gears a bit. Credentials. The ACFE really hammered home how important certification is here. Why does that matter so much?
Yeah, the Certified Fraud Examiner, the CFE, that's really seen as the gold standard.
CFE, okay.
The ACFE makes it clear it gives you that essential technical know-how for investigations. And what really stands out is the data they showed CFEs tend to earn quite a bit more than people without the certification.
Wow.
It just shows how much employers value that specific expertise.
A big income difference like that really tells a story, doesn't it? Are there other key certifications people should know about if they're interested in this?
Definitely. The CFE is top for fraud examination, but your basic accounting certifications like the CPA in the US or the CA elsewhere are often the starting point.
Right, the foundation.
Yeah. And the AICPA also has the CFF, Certified in Financial Forensics, for CPAs who want to specialize. Wikipedia also mentions the CRFE from the American Board of Forensic Accounting, again for CPAs. You might also see CFA, Chartered Financial Analyst, especially if the role involves complex financial instruments. Kind of depends on the specific niche within forensic accounting.
So a strong accounting base plus that specialized forensic training seems like the winning combo. Now, what about the specific knowledge and skills they need? The ACFE had a pretty long list. What's on it?
It's quite broad. Knowledge-wise, you need to understand a whole range of white-collar crime. Things like embezzlement, asset misappropriation, but also more complex stuff like money laundering, securities fraud, financial statement fraud,
Okay.
and insurance claims. CHAPE GA's violations, that's accounting and auditing standards, telemarketing fraud, check kiting, procurement fraud. Even bankruptcy and credit card fraud can come into play.
That's a huge list of potential financial nastiness.
Yeah.
What about the actual skills they use to investigate that stuff?
The ACFE covered those well, too. Report writing is huge. You have to document findings clearly, concisely, make them stand up. Testifying as an expert witness that takes great communication, both written and verbal. Attention to detail. Absolutely non-negotiable when you're wading through data.
I can imagine.
And strong analytical skills, obviously, to spot patterns, anomalies, signs of fraud. Beyond that, you need skills in financial data analysis, making sure evidence integrity is maintained, understanding computer applications, damage assessment, tracing illicit funds, finding hidden assets, doing due diligence, gathering forensic intelligence, knowing accounting procedures, legal system procedures. Some even use things like regression analysis and specialized software.
Wow, it really sounds like you need to be part accountant, part investigator, maybe even part lawyer.
Pretty much sums it up.
Now, the Siege Tax, a Macker advisory article, focused heavily on ethics and professional standards. Why are these so absolutely critical in this line of work?
Well, think about the stakes. Forensic accountants deal with situations where their findings can have massive legal and financial consequences. Their credibility, the reliability of their work, it all hinges on upholding the highest ethical standards. It's non-negotiable.
Okay, so what are the core principles?
The main ones are integrity and objectivity, basically. Being honest and making sure your analysis isn't biased by personal views or outside pressure.
That objectivity piece seems especially tough when you're digging into potential wrongdoing. How do they maintain that?
It's drilled into them. Then there's professional competence and due care, meaning you have to keep your skills sharp and do your work diligently, thoroughly.
Right.
Confidentiality and privacy are also key, given the sensitive data they handle. And finally, professional behavior and conduct, how they interact with everyone involved. Avoiding conflicts of interest, maintaining respect.
And are there specific, rule books or standards they follow in practice?
Yes. The Solar article mentioned they often use the International Standards in Auditing, the ISAs, as a framework for investigations protocols for gathering evidence, assessing risk.
Okay.
Understanding and applying GAAP, generally accepted accounting principles, is fundamental for spotting irregularities in the books. There are also specific forensic accounting standards bodies recommend. And crucially, because things change so fast, new tech, new fraud schemes, continuous learning isn't just nice to have, it's essential.
So a strong internal compass plus external rules and ongoing learning. Got it. Okay, let's get into the nitty-gritty. The actual techniques forensic accountants use. The IJCRT article gave a good overview. What are the main tools in their toolbox?
Well, foundational, as IJCRT highlights, are data analysis and data mining. just exploring huge data sets to find weird patterns, anomalies, anything that hints at fraud. They use specialized software for this.
I bet the amount of data can be overwhelming.
Oh, absolutely massive sometimes, which is where statistical tools like Benford's Law come in handy.
Benford's Law, what's that?
It's this fascinating statistical observation about the frequency of first digits in many real-life data sets. Numbers starting with 1 are way more common than numbers starting with 9, for example. So if financial data wildly deviates from that expected pattern, it can be a big red flag for manipulation.
That's a clever application of statistics. What about more traditional accounting analysis? Still important.
Oh, definitely. Financial statement analysis is still critical. Scrutinizing balance sheets, income statements, cash flows, looking for inconsistencies, weird trends in ratios, anything that just doesn't add up.
Right.
Using financial risk models like the Altman Z-score that predicts bankruptcy risk can also point to areas needing a closer forensic look. And of course, there's the human element. Interviewing and interrogation skills are vital for gathering info and judging credibility. Techniques like the Reed technique are sometimes used there.
So it's definitely not just numbers. There's a big people component, too.
Exactly. And then you have forensic auditing itself, that detailed examination, tracing funds, vouching transactions back to source documents. And in our digital age, digital forensics is indispensable. Analyzing electronic records, emails, recovering deleted data. That's huge now. Document examination, too. Checking the authenticity of physical or digital documents, sometimes using microscopy or handwriting analysis.
Okay.
And finally, fraud risk assessment. That's the proactive side again, evaluating where a company is vulnerable and helping them beef up controls.
That's a really diverse toolkit. The IJCRT article also mentioned things like the net worth method, asset tracing, the Benish model, checking public records, background checks, analyzing physical evidence, even surveillance and interrogation. It really shows the breadth.
Yeah, it's wide-ranging.
Okay, let's make this real. The case studies from Culpeper CPA and some historical examples really show the impact. Let's start with maybe the most famous early one, Al Capone.
Yes, Capone. Brought down by his taxes, not his other crimes.
Right.
Our sources credit Frank Wilson back in the 30s for basically pioneering forensic accounting on that case. He meticulously showed Capone's lavish spending just didn't match his declared income.
Couldn't argue with the numbers.
Exactly. Couldn't nail him for the violence, but the tax evasion stuck, thanks to Wilson's work. It really established that core principle, follow the money. Still absolutely central today.
Amazing how that holds up. What about more recent examples? Enron was huge, wasn't it? Early 2000s.
Oh, massive. Enron was a watershed moment. Really put forensic accounting on the map.
How so?
Forensic accountants were key in untangling that incredibly complex mess of special purpose entities. Enron used to hide debt and puff up profits using mark-to-market accounting.
Right, I remember that term.
Its collapse took down Arthur Andersen, one of the big accounting firms then, and directly led to the Sarbanes-Oxley Act, major reforms in corporate governance.
And then there was Bernie Madoff. Another shocker.
Just colossal.
Yeah.
The largest private Ponzi scheme ever. Close to $65 billion in losses.
Unbelievable.
What's striking there is Harry Markopoulos, a forensic accounting expert, had flagged Madoff's returns as mathematically impossible for years, but regulators didn't listen initially. The investigation later proved Madoff wasn't investing at all, just shuffling money. It really showed how vital forensic skills are in spotting results that are just too good or too consistent to be true.
And the Culpeper CPA cases showed some more maybe local examples, like the Dixon, Illinois embezzlement.
Yeah, that Dixon case is stunning. Rita Crunwell, the controller, stole over $53 million over 20 years.
20 years.
Right.
How?
Forensic accountants found a secret bank account she controlled. She was just funneling city money into it to fund this huge horse breeding operation. It went on so long because there was zero segregation of duties. She controlled everything.
Incredible failure of controls. And the other Culpeper case, Crazy Eddie. Sounds like classic book cooking.
Textbook case. Forensic investigation found all sorts of stuff. Skimming cash, then putting it back later to inflate revenue. Massive inventory overstatements, all to boost the stock price. The CFO eventually blew the whistle. It really highlighted the risks in, those tightly controlled family-run businesses sometimes. The other case they mentioned, the school system one, showed fraud can happen in nonprofits too. Myth-using funds, fake payroll.
These examples really hammer home the impact forensic accounting can have. Now, shifting focus slightly, the Teichner article stressed the role in regulatory compliance. How do forensic accountants fit into today's complex regulatory world?
Oh, they're absolutely vital there.
Uh,
Regulations are just getting more and more complex financial reporting rules,
yep.
anti-money laundering, AML, anti-bribery, ABC, data protection, industry-specific stuff.
It's a minefield.
It is. And businesses need experts to navigate it. Forensic accountants, with that blend of financial and investigative skills, are perfectly placed.
So it's not just about finding fraud after the fact, but helping companies stay compliant before problems happen.
Exactly. They help ensure accurate reporting under GAAP or IFRS through audits, both regular and forensic. For AML, they help build compliance programs, do risk assessments, monitor transactions. For ABC, they help with policies, training, internal investigations, even data protection. They can audit security measures. Plus, navigating rules specific to industries like healthcare or finance.
Right.
The benefits for companies are huge. Better risk management, more efficiency, stronger reputation, and, frankly, legal protection.
Sounds absolutely essential for businesses today. But it can't all be smooth sailing. What are some of the big challenges forensic accountants face?
Well, there are quite a few. Financial instruments just keep getting more complex, which makes tracing things harder.
Sure.
Cross-border investigations are tricky, different laws, different regulations. The sheer volume of data now is often overwhelming.
Yeah, the data deluge.
Right. And fraudsters are always evolving their techniques, so you constantly have to play catch-up. There's also the pressure to balance being thorough with managing costs and juggling different legal standards across jurisdictions.
Definitely sounds like you need to be adaptable. Looking ahead then, what future trends are shaping the field?
Technology is the big one. More AI and machine learning for real-time fraud monitoring, I think. Better tools for analyzing things like blockchain transactions. We'll probably see more specialization too. Experts focusing on specific fraud types or industries, and much closer collaboration with cybersecurity folks as financial crime and cybercrime merge.
That makes sense.
Plus, just generally more sophisticated analytical tools and a bigger push towards prevention, trying to stop fraud before it starts.
It really sounds like a field that's constantly evolving. Okay, finally, let's zoom out. What's the broader impact of forensic accounting on society? Why does it matter overall?
It matters a lot. Sources show companies lose a significant chunk of revenue to fraud every year.
All right.
Good forensic accounting acts as a deterrent. It makes potential fraudsters think twice.
Right.
By uncovering misconduct, they help build public trust in financial markets, which is vital for the economy. They push for better corporate governance, too, holding people accountable. And they're especially valuable for smaller businesses that might not have strong internal controls and are more vulnerable. Ultimately, they play a really key role in protecting the integrity of the whole financial system.
Okay, so wrapping up this deep dive, forensic accounting is clearly this vital discipline going way beyond standard accounting. It blends accounting, investigation, legal knowledge to uncover financial wrongdoing.
Yeah, that's a good summary.
It's crucial for fraud detection, litigation support, regulatory compliance, and just maintaining trust and integrity in finance, as you said.
Yeah.
And for you, the learner, hopefully this gives you a really solid grasp of this important field, its methods, and its real impact.
Hope so.
So here's a final thought to chew on. With technology and financial systems changing so fast, how will forensic accounting keep adapting to stay ahead of ever smarter fraud? And what completely new skills might future forensic accountants need? Something to think about. Thanks for joining us for this deep dive.